Are you tired of missing clean entries and losing trade in Forex? In the next few minutes, I'm going to show you exactly how to spot high probability supply and demand zones and execute sniper level entries that most traders don't even know exist. This video is strictly meant for beginners and professionals in Forex trading. If you came across this video, stick around because this strategy can completely transform your trading results. With no further ado, let's just delve in here. First thing first, there are three things to consider while trading supply and demand, which are breaking a structural level like breakout structure or change of character. Number two, creating imbalance like inefficiency. Number three, collecting liquidity. What do I mean by that? Let's go to the illustration so that I can vividly explain what I mean by all those terms, okay? Number one thing is breaking the structural level. What do I mean by breaking the structural level? Breaking a structural level in the sense that, let me say breakout structure, okay? If you see a breakout structure on the chart or probably a choke, which is change of character on the chart, that is the first thing you need to view first. So if you can see this trend, you can see the market is kind of sell right here according to the illustration. Where is our breakout structure? This is our breakout structure. So market broke out from this structural level. This is the first thing you need to consider. Then after that, an imbalance which cannot be seen on this, on this illustration here, but it will be vividly seen on the financial market graph. So imbalance is very important after a breakout structure. So there must be an imbalance somewhere here for you to validate your supply or demand. But according to this trend, this is a supply zone. We have a supply zone here. So and after that, what is the next thing for you to look out for? You need to look out for liquidity. When market make a pullback to your what? To your supply zone, you need a what? You need a liquidity. You need market to take out liquidity on your confirmation time frame, which you can see here. This is a liquidity being taken out. As you can see, we have a liquidity being taken out from here. Maybe I should just do something like zoom in a little so that it can be more clearer. So we have price taking out liquidity right here before we see this breakout to the downside. Before we see this breakout to the downside. So those are the three things you need to know. Number one, breakout structure or breaking the structural level. Number two, imbalance, inefficiency, or fair value gap, whatever you like it. Number three, liquidity. Liquidity has to be taken after market might have made a correctional phase or an impulse to your supply zone. That is, if you are selling the price. So it is as simple as that. Then let's go to the buying zone. Let's go to the buying market, like the buying trend, the bullish trend. Same thing still applies. You're still gonna need all those three qualities to identify a valid demand zone. This is a demand zone right here. Okay, don't forget supply zone is for selling while a demand zone is for buying. Okay, so you still need all those three things. Number one, breakout structure. We have a breakout structure here. Are you getting it? Breaking the structural level. Markets broke out from the structural level right here. Then after that, you must see what? You must see an inefficiency, okay? There must be an inefficiency somewhere here, okay? Then after that, what else? Market collecting liquidity after making a pullback, but that should be seen mostly on your confirmation entry time frames, okay? So collecting liquidity is right here. Market collected liquidity here, then gave us a what? A breakout of another structural level, which is a choke. So this is just a simple way to trade supply and demand zone, okay? Very simple way to trade it, which is not that hard. If you follow these steps, you will really understand how supply and demand forex strategy works in forex trading or in any other financial markets, being crypto, stock, commodities, synthetic indices, whatever. So this is how it works, okay? So without taking much of our time, let's just go to the live chart. Let's see if you can see an example. First thing first, your directional bias is very important. I think this is 4 hours time frame, EUR GBP. So let's just see if you can see a kind of example, a kind of example, a kind of example, a kind of example. We have a choke here to the downside here. Okay, then after that we have another low being taken out to the downside, probably BOS like that. Okay, so you already know the rules of selling now. You know you need two consecutive lows being broken to the downside before you can say before you can say market is kind of bearish or selling, whatever you like you call it. Okay, so we have this low taking out and we have this low taking out. So now the first thing about this thing is that market must break the structural level, which I told you. So first rule has been met. Market has broken out from this structural level, which is very important. Second rule is inefficiency. There must be an inefficiency. As you can see, this is a lot of inefficiency dancing on the financial market charts. As you can see, we have a lot of inefficiency dancing here, or fair value gap or imbalance, whatever you like you can call it. That is number two. Then after that, what else? What else? You mark your supply zone. This is our supply zone. Then the next like the last rule is for you to be considered on your confirmation entry time frame. Okay, so you need market taking out liquidity on your confirmation entry time frame. That is the last thing to do if you are trading supply and demand. But according to this one, this is a supply zone. Okay, so we are selling here, not a demand zone. So we are not buying, we are selling. So now what are we going to do? We need to go to our confirmation entry time frame. Don't forget, we've actually met two criteria, which is breakout structure, we've seen imbalance. Then the next thing is for us to see market taking out liquidity on our confirmation entry time frame. And also there's still another thing. If you can literally see it on your bias time frame, it's still fine. Okay, it's still fine. You don't need to really go down to confirmation entry time frame, because I can see it right here. The market has taken out liquidity. Collecting liquidity is the last thing. As you can see, market collected liquidity here. As you can see, market collected liquidity here. Then we have a what? We have a breakout here to the downside. So I can see it on our, I can see it on our bias time frame, which is 4 hours. Then what will you do? Just mark your order block like this. Then you are going to be selling from this order block. It is as simple as that. Your stop loss above the high, your stop loss above this protected high like this. Then you target the next external range liquidity, or some people call it buy side liquidity. So whatever you call it in your region is fine. Make sure you target the most realistic take profit. I explained something to you guys about taking profit. I said we have an anticipating take profit and we have a realistic take profit. Okay, so this is our realistic take profit. Okay, this low is our realistic take profit. Easy peasy, no stress. But for the sake of people that would like me to go to 15-minute time frame for confirmation, it is still fine, or probably 30 minutes for confirmation, it is still gonna be fine. So let's just go to our confirmation entry time frame for more clarity of the class. Okay, so let's zoom out. I hope we see that side. 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 I hope the chart shows it. The chart is not showing it. The chart is not showing it. Okay, let's go to 1 hour. Let's go to 1 hour time frame. The chart is not giving us a room to show that. Okay, I think we can see that on 1 hour. Trend time frame 2 is good for your confirmation entry. You can make use of your trend time frame 2 for your confirmation entry. In fact, I even like making use of trend time frame. Yeah. So as you can see, it is very obvious right here. Don't forget the rules. Rule number 1 is what? A breakout structure. Market breaking out a structural level, which is this one. Number 2, on your bias time frame, you need what? You need an imbalance or a fair value gap or an inefficiency to be on that, to be on that zone, right? And we've seen that already on 4 hours. We don't need to go back to it. Then the last thing is market collecting liquidity after market might have made a pullback to your what? To your supply zone, which we've seen this was the pullback from here to here was the pullback. Okay, from here to here was the pullback. Alright, so that was our pullback the market had done. Then after that, what do you need to wait for? Just wait for market to collect liquidity and give you another change of character, which is very very simple. So market collected liquidity right here, as you can see, then give us a what? A change of character. Then you mark your order block, okay? Then you place your whatever, then you target the external liquidity. Easy peasy, no stress. I think you guys can get that. It's not hard. That's how to trade supply and demand zone in forex trading. This is the best forex strategy supply and demand trading skill that you ever see anywhere. Okay, so that is about that. So let's check for the demand zone. You know, we were selling here. Let's look for the buy. Maybe we're gonna see. Let's go to 4 hours again. Let's see if we can see something fantastic or fantabulous. Okay, let me delete all these things. No, it's useless now. Let's see what the price did here. Okay, as you all can see, we can see we've been seeing market shifting lows to the downside, shifting lows to the downside. Okay, market shifting lows to the downside, shifting lows here too to the downside. But what happened here? Market broke out from this high. As we all can see, market broke out from this side. Make sure a candle close is confirmed. Okay, a candle close is very important. I think this one close. So make sure a candle close is confirmed. Don't make use of a wick as your breakout structure or a choke. Okay, make sure a candle close is confirmed. So on our 4 hours time frame now, the first thing about supply and demand trading strategy is what? You need a breakout structure, which we have seen here. Number 2 is imbalance. Can we see imbalance? Can we see imbalance? There is an imbalance. If you go to 8 hours, let's go to 8 hours, because the higher the time frame, the clearer the picture of the market. Okay, so as you can see, we have an imbalance here. Let me zoom this side. We have an imbalance right here, sitting right here. Very beautiful imbalance sitting here, as you all can see. Oh, sorry, that's another block. As you all can see, we have a lot of imbalance right here, as you all can see. Okay, so then you just mark your demand zone. This is our demand zone now. Yeah, so this is our demand zone. So we'll be waiting for market to come back to this side. In as much as you've seen a structural level being broken to the upside, so what else do you need, guys? You just need for market to make a pullback, to make a correctional phase, to make an impulse, whatever you like it, whatever you like to call it in your region. So you just wait for market to just come back to this zone like this. You just mark it out until market comes back to it. Then when you see market coming back to it, what is the next thing for you to do? You already know. I told you guys, the first thing first, structural level being broken. Second thing of all is what? Is your fair value gap. You need to locate your fair value gap, okay, within your supply or demand zone. But according to this one is a demand zone. Yeah. Then after that, you need price collecting liquidity on your what? On your confirmation entry time frame. And if you can still see it on your bias time frame, it is what? It is fine. It is cool. Don't stress yourself when you are doing your technical analysis. You don't need to stress yourself. Just make it simple. The simpler the analysis, you know, the easier you see entry on the financial market graph. Okay, so as we can see now, we have our demand zone here. Sorry for saying other block here, because the class is always about demand and supply. Okay, I don't need to be using other block or whatever. Yeah, so this is our demand zone right here, sitting here. Okay, so our market has, you know, price has came back to it. Then what do you need? You need market taking out liquidity. I can see it on this 8 hours time frame. Okay, I can definitely see it on this 8 hour time frame. Let me just pull this a little bit away, or probably change the background to be more lighter. Okay, something like this is fine. Okay, so as you can see, we've seen a liquidity sweep. Where is it? This is our liquidity sweep. This low here is the last low. The market swept it out. So this is what we call market collecting what? Collecting liquidity. Then after that, what else do you see? You see market giving you another choke, which is very, very beautiful. That's the confirmation that the market wants to fly again like a bird in the sky, okay? So that is just how to, you can see it is very, very simple. Just three rules is okay for supply and demand trading strategy. Just three rules. Number one thing is for you to wait for a breakout structure, market breaking out from a cemented high, market giving you a breakout from a structural level. Number two, identify your fair value gap, imbalance, whatever you like to call it, inefficiency is okay, anything that you call it in your region is fine. Yet number three is just for you to wait for a pullback. The market should come back to your supply zone, like market should come back to your demand zone, like market should come back to your what, to your fair value gap range, fair value gap area, fair value gap zones. Then when markets come back to it, what else do you need? Just wait for market, wait for price collecting liquidities. It's as simple as that. But there's something about technical analysis. Let me say trading generally, you have to be more exercise patience, okay? You have to be so calm to see things that you need to see before you execute the trade, okay? You have to be so calm. Like if there is another word I can use for the calmness, I will be providing using that word, okay? Because you have to be very, very calm, because price, let me say market rewards the most calmness traders on the financial market graph. Yes, market rewards the most calmness trader. If there is any word like calmness, okay, market reward the most calmness trader on the financial market graph. So you have to be very calm to see things that you need to see before you. So these on 8 hours, we can see our market, we can see price collecting liquidity and giving us the change of change of character. Market giving us the market structure shift, change in state of delivery is fine. Then what else? The market is ready to fly like a bird in the sky. It's as simple as that. But we have another block here, and we have another. I have a video on this channel about breaker blocks. If I was to buy this market, I'll be buying from a breaker block, right? I'll be buying from a breaker block right here. If I am to buy, this is a breaker block, then my stop loss below this low. Then you understand? Then I'll be targeting the external range liquidity, or probably targeting the internal range liquidity, whatever. Taking profit is always about what? It's always about the trader. Can decide to target here, and if you want to target 1 to 2, it's fine. You can decide to target 1 to 2 like this, and whatever way you want to target is fine, okay? So it is so cool and it is so fine, especially when you are trading the trend. External range liquidity is okay when you are trading the trend, but if you can see on your bias you are not trading the trend, it is so better for you to do what, to just target maybe 1 to 2 or any internal range liquidity that you can see. Because according to this trend now, I can see this price on 4 hours time frame is kind of doing what, I think, let me zoom out and see. I think this market is kind of doing a kind of counter sale currently. It's a counter sale currently, so it's better for you to just 1 to 2 is fine if it is a counter. If, like, I mean, if the price is selling on your bias, 1 to 2 is fine. But if the market is really, for example, if this price is really buying, like if it is really buying, I told you something about rules of how to identify a bearish and a bullish trend. I said two major lows being broken to the downside if you are selling, and two major highs being broken to the upside if you are buying. But according to this one, we only see what, we can only see a major high being broken to the upside. This is the next one. If market should break out from this next one now with a lot of displacement, then we can say the market is ready to fly, like the market is ready to buy hard, like the market is ready to go bullish more harder. Shey you get? But as a matter of fact, we only have one high being displaced, okay? So this market is still kind of it might still continue selling anywhere from here without breaking this high to the upside. So you have to be very careful too, yeah? So that is just how to trade supply and demand in a more simpler way. But let's do something. Let's go to 1 hour time frame, or let's go to 1 hour time frame. That's our trend time frame. Let's go to 1 hour time frame. Let's see clearly how market took out liquidity. Because some people will be like, bro is not going to the lower time frame to check the confirmation entry well. So let me remove this. So according to this, let me remove this too. So according to this, as you can see, we have a liquidity sweep, very clear, beautiful and nice. Everybody can see that. Very beautiful. You can see very beautiful liquidity sweep. Then we have a breakout. So this is what we call price collecting liquidity. So price has collected liquidity here. Then you see the fly to the upside. So that means the market wants to buy. So like I said, if you can see it on your bias, you don't need to go to the lower time frames or whatever. Okay. So that is just how it is. So I don't know. Let me check if there is still. This is 20 minutes already. I don't know. Maybe I should just check one. Let's check one pair. If I'm going to see another example, I've made an example on both supply and demand zones now. Okay, but let me just see if I can. What pair should we? What pair? What pair? What pair? Okay, let's check GBP USD. Let's check GBP USD. 4 hours time frame. 4 hours time frame. So let's see. I have an analysis on this already. Safe. What's this? What's this? What's this? What's this? Did I do this? Okay. I think I have an analysis on this. Okay. Let's see. Let's see. You just need market disrespecting the structural level, which is very, very important. That is the first thing to trace supply and demand. As you can see now, market has disrespected this structural level here. First thing first. Second thing is that you need your fair value gap, inefficiency, and imbalance, whatever you like it. Which is this? We can see we have inefficiency here. Okay, so then after you might have spot that, then you mark your supply zone. According to this one, it's a supply zone. Easy peasy, no stress. This is a supply zone. Then after that, what else do you need to do? Is just for you to go to your confirmation and time frame and wait for price to collect liquidity. Then when price collects liquidity, then you open to execute your trade. But according to these 4 hours, who can see what's happening? I don't know if you guys can see what is happening. I cannot really see anything happening on 4 hours. Okay, I cannot really see anything that is happening on 4 hours. So let me go to 1 hour for my confirmation entry, because price is already at my supply zone and every criteria for me to identify a valid supply zone has been what? It has been met. So it has been met. Has been met. So let me see. So you can see, let me just zoom out this side. Okay, it is getting interesting on 1 hour time frame. It's getting interesting. We need a what? We need price taking out liquidity, right? Collecting liquidity, right? So we had this high here. The market has collected the liquidity, as you all can see. Easy peasy, no stress. That is market collecting liquidity. Not only that, market broke out from this low. This is the last low. I told you don't use wick as a confirmation of your breakout. Use candlesticks, okay? So let's make use of candlesticks. Let me zoom a little bit. Let me zoom this side. Let me zoom this side a little bit. As you can see, we had this low here. Then this candle closes. Don't make a mistake by making use of this wick, okay? It's very, very risky. Make sure candle close occurs. So this candle closes, okay? That candle closes. So now we've confirmed all the three things that we need to see. Number one, structural level has been broken from the bias time frame. Number two, on our bias time frame, we've been able to identify our fair value gap, imbalance, or whatever you like to call it. And number three is on our confirmation any time frame, we've been able to see markets collecting liquidity and giving us a choke, change of character. So it's as simple as now. If you want to now sell, how do you do it? You can just go to your higher time frame to look for a proper order block or breaker block. I don't know, you guys need to go watch the breaker block strategy, okay? It is very, very important. Maybe I will tag it at the end of this video for you guys to see, okay? Very, very important. Very, very important, because you might miss a lot of trade, or you might miss a lot of trade if you are not really trading from breaker block after a confirmation stuff like this, okay? So if it is a breaker block I want to, if it is a new, like, because the market is going to form a new supply zone, if it is a new supply zone that you want to use, you just place your limit here, your stop loss above the high, or probably you might give it a little bit of breath like this. Then you target the external range liquidity just like I said, or sell side liquidity, whatever you like you call it. can just target it. But as you can see, this market is kind of buying, right? According to this time that the market printed these price actions, as you can see, we have this last time being broken to the upside. So this market is buying. So this is just a counter sell, okay? So you might just probably, target 1 to 2 because it's a counter sell. You might even target 1 to 1.5 as your take profit, or probably this is 1 to 1.6 is fine. You might target 1 to 1.6 like this because you are countering the trend, and it is very very risky, okay? So you can just target 1 to 1.5 or 6 then, or probably target 1 to 2. You can target 1 to 2 like this and it is fine, okay, because you are countering the trend. Anything can happen. This market might decide to just do something like this, then break this high, giving us another choke to continue buying, then market will take you out. So it is better for you to be very very careful when you are counter trading the trend. And there is something about trading: greediness is not allowed, okay? Greediness is not allowed. If you are a greedy person, you can't trade. You can't be a profitable trader if you are a greedy person. That's just the fact, okay? So that is it about that. And if you are still targeting the external range, it is still fine, but just know that you might hit stop loss because you are counter trading the trend. So if you are targeting the sell side liquidity, is still fine, but just know that you are counter trading the trend and the market might decide to pull you out, okay? So as you can see, that is just how simple it is to trade supply and demand in forex trading, or maybe crypto, whatever. So if I think with this you should be able to understand what's up. And if this video really helps you guys, you can literally share this video to your friends struggling with technical analysis in one way or the other, so that they too can learn one or two from this video. And don't forget to subscribe to this YouTube channel, like and comment. If you have any topics for us to cover, you can just drop it in the comment section. When we see it, we will definitely cover the questions, like we definitely cover the topics that you commented, just like the way we are doing this too, okay? Some people told us to do this too, that's why we are doing it. So if you also have one or two that is bothering your mind about technical analysis, you can make a comment in the comment section. Then we're gonna do it for you guys. And that's all, okay? Bye, and do have a wonderful day ahead, okay?